Alright everyone, Cowboy Trades here, welcome to the channel, welcome to the educational series. Today we're going to talk about volume profiles, specifically the fixed volume profiles, but we're also going to talk about the volume profiles for the visible range, better known as the VPVR. Now, these tools are both free on TradingView if you know what you're doing, so let's dive right in. I'm going to start off on a fresh chart so you can follow what I'm doing and add the exact same tools as me. After this, I'm going to give you a bullish example, I'm going to give you a bearish example, and then I'm going to show you how you can incorporate volume profiles in your trading plan and how you can trade using these volume profiles. So let's dive right in. So starting off on a blank TradingView chart, all you're going to want to do is come over to the left side of the screen and find this smiley face emoji. It might be different depending on if you've used this tool before. It will be 2 steps above the ruler if you have used this before. All you want to do is find this toolbox over here, and you want to pull down and come over to the fixed range volume profiles, or the volume profiles for the fixed range. Now with this, all you're going to want to do is click on a specific range, or click on the start of a specific range that you want to look at, and then pull this all the way up to the top, making sure you're pulling it above where the market is traded. So you're incorporating all of this volume, and you want to pull it as far to the right as you possibly can. Now you'll notice it won't let you pull any further than it currently is, and that is because obviously it can't tell you the volume that's going to be traded in the future. So all it's telling you when you draw out this is, hey, this is where the volume profiles were traded from the start of this range all the way down here, from the lows all the way up to the top of this range, and then back down here. So it's basically telling you all the volume that was traded in this range over here. Now this red line right in the middle of this is going to be called the point of control. This is where the most amount of volume was traded. Now this can be where the most amount of buy orders were, sell orders were, but in general it's the collective of both the buy and the sell orders. Now markets typically love to trade around these points of control, and when we're done trading around these points of control, we move to other points of control. I'm first of all going to show you how to amend this chart, and then we're going to jump into the bullish example, bearish example, and then of course how to trade these. Now personally, how I like to use these, if you're looking at these for the first time and you're seeing these blue and yellow boxes, you might be wondering, which is the buy volume, which is the sell volume. So if you want to click on this, simply double click on wherever you've clicked the fixed volume profiles. You'll be automatically on inputs. You want to come over to style, and then for the up volume, as you can imagine, this is bullish. You want to put this as green. Value area up, you're also going to want to set this as green. And then for the last two, which are down volume and volume area down, you're going to want to put these both as red. So this is basically now telling you with green and red, as you can very easily imagine, green is going to be where buyers are stepping into this market and buying, and red is going to be where sellers are going to be selling. And when you come down to the lower time frames, for example, if we pull something like, I've favorited this tool, by the way, so if you do want to favorite this, you'll find it up in the toolbar. It'll be much easier to get to. For example, if we're pulling a range, you can really see, if we zoom in, this was the point of control. We were trapped beneath this thick area where volume was traded, right around this point of control. And then as soon as you cleared this, volume profile started tapering to the upside, and we started running to the upside. Now, before I start explaining how this works, I want to tell you the concept of a market maker, because this is going to help the concept of why we move between these volume profiles much more fluid, and you're going to understand not only how to use these from a technical perspective, but you're also going to understand the fundamentals, which is something that I do like to talk about a lot on my channel. So fundamentally, why does it make sense that we move from, these points of control to these points of control? Why does it make sense that markets always love to run between these areas, crashing and grabbing liquidity from point A to point B? Well, this is where the concept of a market maker comes in. Now, I'm not going to dive too much into this because obviously I do want to teach you the technicals as well. I don't want to spend too much time on this, but market makers, almost their sole goal in the market is to make profit and provide liquidity for these markets. Now, what I mean by providing liquidity is they know where volume is traded. They know where open areas of interest are for selling. They know where open interests are for buying. And if they want to have extra liquidity in these markets to provide extra opportunities for trades, as you can imagine, a market that's highly liquid is going to be hard to leverage trade. It's going to be hard to buy and sell when the time comes. You really want to invest in assets that are highly liquid. You want to trade assets that are highly liquid because it means that you can liquidate it like that. If you buy a brick of gold, you're gonna have, it's very illiquid. You're gonna have to find a buyer for that very quickly. But for example, in markets like Bitcoin, the SPX, these market makers provide a lot of liquidity at these certain regions, so these markets can trade very freely and very fluidly. So with that, market makers love to pull us between these volume profiles because, for example, if we clear up this chart, let's look at what happened from Bitcoin, and we'll talk about how the market makers grabbed liquidity and then pushed this up in a bullish example. So let's look at this 2017-2018 bull run. Now, let's grab our fixed volume profiles, and we simply want to focus from the bottom down here all the way up to the top. Now, we can drag this out a bit if you want to, but specifically I'm interested in, if we did break into a bear market, where are there going to be volume clusters? Where's there going to be support accumulated? Now, what this told us is, hey, if we break beneath this level, we're going to come down to this level, and if we break beneath this level, we're coming down to this level. Over on here, you can see there was a big volume cluster, and what was this significant of? Well, this was the floor that we were holding, around about $6,000. We were holding it, and if we zoom in, you can see there's more green than red in these areas, meaning that bulls were obviously overpowering the bears. And as soon as we broke beneath this volume profile, you can see volume starts to taper off to the downside. And if we do look to the downside, you can see where's the next big cluster of volume? Where would market makers love to pull us down to grab excess liquidity, provide extra trading opportunities, and subsequently make more money? Well, it was all the way down here. So the volume profiles were saying, hey, there's a big range. There is also a big candle down here. So between this range, round about 4,300 all the way down to about 4,100, this is where the volume profiles were saying, hey, there's going to be a lot of interest in these markets. So if we do break us down from this volume profile area, it's going to be great to grab excess liquidity at these areas before we push up to the upside. Now, let's reset this chart. Let's move back a sec, because after here, you can see, like I said, we grabbed liquidity from this volume profile, and then we went on a bull run. So let's zoom out a little bit, and this is where the bullish example is really going to come into play. Now, if we grab, bear in mind, once again, we're only looking at the volume traded in this bull market. So once we kind of stopped off at this range here, there is no volume that's traded around these regions that is considered in this chart over here. So we're simply looking at where volume was traded around these regions, and subsequently it's going to give us a good area of insight on how the next market might perform as market makers grab the liquidity from these regions. Where's the next area to grab liquidity from? Well, you can see it's right here on the point of control. If we grab a rectangle tool, you can see from down here all the way up to about 7,000 or so. That is where the most amount of liquidity was in that instance from this bull run. So what happened after we grabbed liquidity from this level? Well, market makers wanted more opportunity. They wanted more liquidity. So we instantly just rocketed up to this next area of the volume profiles, and we flipped it as support. We pushed up to the upside. As you can see, these volume profiles started to taper off at this point. And when there's not too much volume in the market, typically you can fly into price discovery to the upside, or for example, if you're breaking to the downside, like over here, like I said, there's tapering off liquidity. There's not that much liquidity in these regions. So when you find that you're falling from a volume profile and there's no support beneath you, you find that you fall down very, very quickly. And then when there's not too much volume to the upside, for example, once we broke above this range, you can really see if I highlight the next area of support on the volume profiles, I'll highlight this box as orange, where, as you can see from this orange box, as soon as you get above this orange box, liquidity starts to taper. You start to run to the upside. There's no liquidity, so, there's really no buy orders, there's no sell orders, there's no previous data traded, or at least there's not much of it. So markets are very, very liquid at this point. They can move very, very quickly up to higher valuations. And you can see, where did we get stuck at? Well, we got stuck trading at these volume profiles for about a year or so, and then what happened? Once you finally broke above this, you broke back down, you back tested this volume cluster, and then boom, you started to run to the upside. How did we run so very quickly to the upside in this bullish example? Well, as you can see, after we cleared this specific volume profile here, we went up 5.8x or 585% approximately. Now, we did this because, as you can see over here, there's really not much volume traded. There's no data traded as well above this volume cluster. So as soon as we cleared this volume cluster, market traders and market makers spent a lot of time trading around these regions. And as soon as we popped above this and we flipped it as support, once again, volume tapers to the upside. And this is the bullish example where you can see where there's no volume traded above yourself, you instantly kind of snap into this price discovery. And this is where you find that you can get, whether you're looking at Bitcoin, the SPX, other crypto assets, precious metals, it's all the same for these volume profiles. As soon as you clear one of these areas on the volume profiles, you're very likely to run to the upside. So this is an example of how to use volume profiles to understand, for example, when we break to the downside, where we're going to find support. We're going to find it at the volume clusters. This is where the market makers want to pull us down to. But then more importantly, obviously, as this is the bullish example, when we do come down to these volume profiles and we do break bullish, we can look at these volume profiles and we can say, hey, market makers are going to want to pull us to these liquidity areas. And as we're now at these areas of mass liquidity, they want us to trade around these regions. There's plenty of opportunities for chop to the upside. There's plenty of opportunities for bulls to make money here. And then bears make money as well. Bulls make money, bears make money, bulls make money, bears make money as you grab this volume cluster down here. And then after then, it's immediately up. You flip this volume cluster as support and you immediately ping to the upside because there's not much data traded and there's not many volume clusters above this range that I was talking about a second ago. So there you go, that is the bullish example. So now we know about the fundamentals on how these volume profiles, these volume clusters, points of control, and market makers all tie into this analysis. This is going to make the bearish example and the trading example much more quick for me to slide through because I won't explain the fundamentals from here, as you should have got it from the bullish example that we did. So let's clear up this chart. Let's talk about a bearish example. Now, right now, as of the time of recording this, if you're watching this in a year's time, 2 years' time, the scenario will probably be very different. But at this moment in time, we are in a bear market. So let's talk about a bearish example and how you can use these volume profiles to your advantage. Now, right now, if I draw a fixed volume profile from basically just where this just from where the 2017-2018 bull market topped out. So I'm incorporating the data from this bear market, I'm incorporating the data from this bull market, and I'm incorporating the data from the bear market that we're currently trading in right now. So I've got the best of all worlds with this really. Now, when I zoom into the volume clusters, let's forget about the price trading around about this range for a second. I want to show you how accurate this can be. Now, let's see, right over here you can see a very prominent volume cluster that's sticking out from all these ranges and all these ranges. So right now what I can see is a big cluster of volume right here, and then when we move to the downside, you could imagine once again there's not much volume clusters beneath there's not much volume traded, so market makers are going to want to pull us to these areas of mass liquidity. Point of control is all the way down here at $6,500. Now, I do also want to specify that just because these points of controls may have very bullish price targets, very bearish price targets, it is not suggesting it is coming down to this region. The volume profiles are simply telling you where the most amount of volume was traded within a fixed example or a visible example. So once again, you have to use your own intuition with these markets. For example, you might look at this and think, hey, the point of control is too low, we're never going back down to this price target, so instead I'm going to use my intuition, I'm going to look at this volume cluster, and as you can see, a much more conservative example is where there's major support coming in at 12,000. So we've looked at the two major volume clusters right now. Now, what we're going to do is we're going to zoom out so we can see the price action, and let's pull these volume clusters out. I have to zoom in a little bit to grab this, and let's see, what these kind of tell us about the market right now. Well, what a surprise, the most amount of volume traded in the visible range, for example, in the immediate short term is what I mean by this, by the visible range, is this level that we're sitting on right now, between 18,700 all the way up to 20,500. Why does this make sense? Well, there was plenty of buy orders and specifically sell orders back in the past during the 2018 top. So you can see the volume profiles, they have literally highlighted the 2018 top. They highlighted this point of resistance that we spent a month trading at before we flipped it as support. And then what do you know? We're spending tons of time holding this area of support right now. Why is this? This is because market makers are very happy while we're in this area of liquidity. And until we push to the downside of this, where there's no volume traded beneath us, they are going to want to trade within this range. And then once again, as we solidly lose this volume cluster, that is when you can imagine that we're going to trade all the way down. At least in my opinion, the way that I'm looking at this chart is that Bitcoin could be coming down to maybe 14,000, 12,000, where these volume clusters on the volume profiles for the fixed range rather start to kick in. So this is the bearish example. What this is telling us is, hey, if we lose this volume cluster over here, if we start putting in weekly candle body closes, and when we zoom in, you can see candle body closes were right on par with this volume profile. So this is going to be a very powerful tool. As soon as we start, moving to the upside of this, you can see, there's not much volume traded, so we can quickly move up to the upside. And the same when we start to move to the downside. If you do break beneath this, as there's not much volume traded, you're going to see a very, very quick and bearish cascade down to lower price targets. So this is an example of how to use the fixed volume profiles in a bearish example. Let's now move on to how to use this for your trading. You can use this for shorting, you can use this for longing. For this example, I'm going to use KDA USDT. So what I've highlighted in this is I've basically just taken a super simple snapshot. Let me remove all the drawings so I can show you what I'm doing. Once again, I want to incorporate all the data that's been traded. I don't just want to grab the data that's been traded from this bull run here, because as you can see, the point of control has already been lost. So when in doubt, zoom out. Let's come all the way back down to when Cadena really started trading from its ICO. Let's drag this all the way out. And what do you know? The volume clusters are telling us major support is coming down right here. Now, one thing that I would like to highlight with these volume clusters is sometimes you might notice this is like an unholy, very, very thick very, very thick bar in terms of the volume profiles. Now, if you do want to make these larger, you can come over to the row size and increase them. I've actually already increased them. I think by default it comes at like 100, so you can actually see this is how it would be probably when you've started it up. I don't think you can go above 250. If I had put in 260, oh, you can. So let's see, you can go up to 300, 400. And as you can see, if you really want to, you can keep on increasing the row size and get more accurate areas where these volume profiles were traded. So I personally like to have it somewhere in the middle. I'm going to keep it where it was at 250. I haven't adjusted the value area volume. I've kept that at 100. And this is, once again, if you do just want to take a snapshot, this is all of my stats over here that I did explain at the start of the video. Now, this is a trading example, so let's talk about it. Now, this is a very prominent volume cluster right over here. Now, you can actually argue this would be the most prominent one. Obviously, this is the one that's sticking out the most, so this is the one that you should probably take example of. But if you're being conservative, you do also probably want to take into consideration the one just above and the one just below, because these are obviously volume clusters. Now, coming to the downside, you can see there's a lot of open interest as you come down to about 86. This is where, people might start stepping in and buying into the market. But if we're being honest, you can actually see that the most amount of data was traded all the way down for here at much, much lower price targets. Now, once again, this is going to be something where you're going to need to use your own intuition. You might be very bullish on the altcoin or crypto that you're charting, and it might be telling you, hey, the volume profiles are saying that the market makers would want us to come down another 90%, but you might be using your intuition. You might be looking at the market cap and saying, hey, the market cap of this is pretty high. It might not be coming down another 90%. You also do want to keep an eye on things like the DXY, government bonds. Keep an eye on what's going on in the economy, because, nonetheless, these volume profiles, they're going to be good for the short term and the long term, but really they're going to follow the general market. So you do also want to keep an eye on things like the SPX, the DXY, government bonds, etc., etc. Because once again, the volume profiles, they're very ambiguous. For example, they're not telling you what volume profile you're going to go down to. This is where you're going to need to use your own noggin, compare this with other TA. For example, you might want to pair this with something like a Fibonacci and say, hey, if there were any Fibonacci's around this level, this is where you would want to come down to. There are no fibs here, so you might want to pair this with something like an EMA ribbon, Heikin-Ashi candles, etc. But for this video, I just want to focus on this. So as you can see, in the trading example, you have broken beneath this volume profile, and it looks like the next volume cluster where you actually have a tiny bit of support is coming in at 86 cents. So you could have started shorting the second that you put in a weekly candle body close beneath here. So as you can see, not drawing this from the volume profile, drawing this from where we had a weekly candle body close, you could have started to short. And as you can see, this is currently down about 8%. Obviously, if you're using about 10x leverage, this would be, you know, 85% in profit already. And if you really wanted to, you could short this to just above this volume cluster. You could anticipate that the price action could come down to this volume cluster, bounce a little bit and lollygag before breaking down and coming down to the next volume cluster. Once again, like I said, these volume profiles, they are not telling you exactly where the price is going to go to. You need to use your own intuition with these. You need to think about the market as a whole. You need to think about, are we in a bullish scenario like we talked about at the start? Can we use these volume profiles? Have we grabbed liquidity from lower areas, and subsequently can we expect price to come up to these higher volume profiles? And in bearish examples like I'm talking about right here with KDA, if we've lost the volume profile and volume starts to taper to the downside, so we know there's not much support, we know, hey, you know, this is probably the time to be in a short position as we do move down to these next volume clusters. So that's really all I've got for you today. I just wanted to give you a couple of examples on how to use the VPVR. I will also show you on how to use the fixed volume profiles. I will also show you how to use the VPVR. I'm not as big of a fan of these because the fixed volume profiles, you can fix them to a specific range, which is much more inherently useful than the VPVR. But if you do type in over on TradingView VPVR, the TradingView version does cost money, but you can find this community tool called Fred's Volume Profile for the visible range. This is basically just copied the metadata from the original one. I think it's twisted over, so it's a little bit awkward. If you do click on this one, you will see that the volume actually flares out to the side. But you can also look at in the lower time frames, for example, if we come over, let's see if there's anything that this can tell us over on the daily time frame. Well, over for the visible range, you can see this was where we traded. We were trading within this choppy range, and then as you can see, we started to lose the floor and we broke to the downside. So volume was accumulated here. As you can imagine, after we broke beneath this, there was going to be no volume traded on this visible range, so we started moving to the downside. We've got a visible range here, and as we start to break to the downside, as you can see, there's literally no volume profiles here, so we would start to taper off and go very quickly down to lower price targets, like for example this next volume cluster. If we come over to the weekly time frame, you compare this with the fixed volume profiles over here. Like I said, I personally don't use the VPVRs as much as I use the fixed volume profiles, because obviously you can literally say, hey, I want to look at the specific volume from this bull market, I want to look at the specific volume from this bear market, or you could say, like myself in this video for the bullish example, I want to look at all the data that's traded within this range, and I'm not too interested in just looking at the visible range for here. So that's all I've got for you today. I hope you did enjoy this video. If you did, make sure to like, comment, smash that subscribe button. Make sure to turn notifications on. This is just one video in an entire educational series that I do have on my channel, so make sure to head down to the description down below and check the rest of the educational playlists out. So for today, Cowboys, that's all I've got. Cowboy out. Peace.